Hey, how are we doing? First stream again, back in Dubai, and first stream in Dubai. So this will be an exciting one for sure, because today we are about to see a lot of volatility. We will see probably a lot of price action during this stream. I do think so. I have been talking about this fact already since the beginning or the end of last week. So last Sunday, I've been talking about this, that we will be seeing a lot of volatility during this week. So I'm going to be expecting that. But first of all, guys, before going over all of the alpha that I will be going over, well, first let's check in. Let's see if everything is working correctly, because yeah, this is a new different setup that I've got running. I'm not sure if everything is running smoothly, you know, is the Wi-Fi connection good? Is the microphone good? Etc. Let me know in the live chat, and we will wait for some people to start and join the stream. And then we will get started with all of the alpha. So let me know in the live chat, where are you from? And is everything running good? Is everything running smooth? And after that, we can be starting. First of all, I'm looking forward to the 109K, then Automai. Yeah, possibly we are going to go over some scenarios a bit later, because Bitcoin has been seeing a bit of a dump just a second ago, you know, a few minutes ago. And this scenario is still in play. So let me know, guys, in the chat if everything is running smoothly. I can't see anything yet. So I'm starting to get a bit worried. About that. Where was the crazy city skyline view gone? I mean, I can turn around. There you go. Everything like that. I've just replaced my desktop. I think it's a bit better like this, because previously I had all of these big lights on me, etc. And right now it's much easier. I just have this window in front of me, and through the window I'm getting natural light. And I think that's a lot better for my own setup. And I didn't really know how many people will really care about the background view. I mean, it's kind of cool, you know, but in the end of the day, people just will come here for the alpha and not for the Dubai skyline. I mean, in the end of the day, who cares about it, you know? The real thing is just the alpha that I'm talking about. It's not about my background. I will try to make it a little bit cooler here. Also, even my room here is kind of echoing. It's kind of crazy. But yeah, I didn't do much with this room, to be honest. All of my rooms are like decorated, etc. Very well furnished. But yeah, this one doesn't have much. I like the skyline. Yeah, I like the skyline too. But like in the end of the day, it was all of the lights in front of me, because I needed to run that setup with very bright lights shining on my face, because otherwise you can't even see the background because of all of the backlight you've got from that setup. But anyway, all of these bright lights were giving me a little bit of a headache, so I was like, yeah, no, it's not complaining about the background, man. But in the end of the day, I was just thinking, I don't really care. It doesn't really matter that much. I'm just going to go with this, because that's what I like, and people will just come for the alpha, right? It doesn't really matter that much. Anyways, let's get started with the alpha, because we are right now here with 132 people. Make sure to push up that like button. That's for sure really appreciated. Today we are going to see a lot of volatility, that's for sure. Now, the first thing that I want to go over is that Bitcoin is still on massive support. It is still on massive support. That's a fact. I mean, we are still trading at this level over here. And I do still think that this level will continue to hold as long as it doesn't. That's quite honestly. I'm still sitting in all of my positions over on weeks, so that's still good. Still just riding them, still keeping them open. I've been sharing all of my game plan, etc. in my private Telegram community with the first link down below. But anyway, yeah, we are still sitting at support. And I'm still bullish on Bitcoin. Don't get me wrong, I'm still very bullish on Bitcoin, but just right over here, I've been talking about that liquidity sweep above, and that wasn't looking all too great. And just like we have seen right over here. And what did we get eventually right over here? We got a break to the downside. So keep that one in mind, okay? Now, right over here, I was talking about this fact too, where probably we're just gonna see a liquidity sweep and then a push higher. Eventually, we went lower than expected, okay? And I longed at the trendline breakout, so still all good. But right over here, if we do come down, further down and break this to the downside, I do think the potential scenario is there. Very likely that we will just liquidity sweep below that previous low and then reverse to the upside. Because Bitcoin always does this. Bitcoin always grabs liquidity from the downside, always breaks below that previous low before reversing back to the upside. I will quickly zoom out on this chart to show you this fact. If you've been following me for longer, you know about this already. Maybe this chart will even be better. Right over here, we had a base level of support and we saw a liquidity sweep below, and that marked the bottom and we went to the upside. Right over here, again, we went below that baseline level of support. We saw liquidity sweep and we went back to the upside. Now you could draw this level of support again, liquidity sweep below, and we went to the upside. Right here again, we had that level of support, liquidity sweep below, and we went back to the upside. Right here again, level of support, we saw liquidity sweep over here. That's why I drew this arrow over here. And we went back to the upside. Now it also goes with the downside because we had a liquidity sweep from the top side and we went back to the downside, okay? You see where I'm going? Right over here as well. We had this level of support, liquidity sweep below, and then we went to the upside again. Right over here, same thing again, liquidity sweep below. Right over here, the same thing might just be happening before reversing to the upside again. That's why I'm thinking it might be pretty likely to see a liquidity sweep still below this level over here, still about 111, still about 108k level. People are talking in my YouTube comments that I'm placing my daily update videos. People are saying, now you flip bearish. But keep in mind, I've been saying this already since this moment over here, since we broke below that 115k level. I've been saying, yeah, very likely we're gonna see this liquidity sweep. I've been saying it basically even at the highs over here. Go back to that YouTube video. I'm gonna load it up right now because it's important for people to understand, you know. I'm gonna load it up right now because at that high, people were thinking I was incredibly bullish, but I was actually not. Here, this is my channel. And then if you go to the videos, you go to the exact top. I've created a video by "This is dangerous" and brace yourself. Okay, so I was talking about a liquidity sweep that it was looking kind of rather a bit more dangerous. Now after that, still had a look into the EMA ribbons. We couldn't get supported, so that 105k level, I was saying, yeah, very likely we will come lower to this level over here. Right now, we're just getting rejected by this level of resistance. Today, again, we had a retest, okay? And I talked about it in today's update video. We had a retest, and right now we're headed lower out of the anticipation of this huge Jackson Hole Jerome Powell speech that we will get today. And this will be the most important thing to talk about and to look at and to watch live. And we will be watching this live during this stream because be prepared. A lot of volatility is going to be inevitable. Prepare yourself right now and make sure that you're positioned well right now before the event. And then during the event, we will be trading it. We will be going over it. We will be talking about it. We will be watching it live. But right now, I'm going to go over all of the possible scenarios that we could be seeing during the event, in my opinion. Now, talking about some scenarios, first of all, usually we have always seen a dump to the downside during about this event. We've always, without fail, basically. There's been a few times whenever we did go up even more, but usually these events really turn out to be quite bearish. I think it is because it is uncertainty in the market. Yeah, uncertainty, that's just a fact. The market doesn't like uncertainty. Whenever people are uncertain of what will happen next, they will just pull out their liquidity, pull out their money, because they don't want to lose. They'd rather watch what will happen for sure and then go back in the market than go through the uncertain times, right? That's how the market works. So I think that's really basically the basic explanation of why this event is almost kind of bearish. We do not know what will happen yet. By the way, I'm getting a text. Let me quickly have a look at it. All right, so yeah, basically it's uncertainty, which is driving a bit of a dump right now for the short term. And I do think, to be quite honest, most likely scenario, it can continue for a bit, okay? Most likely scenario, I do think this uncertainty definitely until the event will continue. Because the rate probabilities are looking kind of bad, in my opinion. For the September Fed meeting, I mean, the probabilities are dropping lower and lower. They're literally dropping off a cliff. Right now, they're falling below the 70% mark of a probability of seeing a rate cut. Keep in mind, before, it was literally 95% probability that we were going to see this rate cut. So rate cuts are dropping off a cliff. Markets are getting uncertain. They're getting worried. They think this rate cut isn't going to be happening anymore. However, what I think will be happening actually during the meeting, and I do want to be emphasizing, there's no way of knowing what Jerome Powell will actually say during the meeting. Nobody knows this. Only Jerome Powell himself knows this. But that's why it's going to be so important to have a look into. Market is anticipating a bit of bearish news, but I think what Jerome Powell will say is just the usual. Just like, yeah, we cannot really give a direction yet. We're going to have a look into it for the September meeting. It's just going to state all of the facts, like initial jobless claims are rising, tariffs are causing inflation. We will need to monitor it, and we will just let you know by September. Okay, I think that's going to be the most likely scenario. But if he is going to be saying, yeah, I don't think we will rate cuts in September, don't think any rate cuts are on the table for September, like something like that, or along these lines. Like if he's going to make it obvious that no rate cuts are going to be happening during the September meeting, well, get ready for a bit of a drop, guys. Get ready for a bit of a crash, I would say. In that case, like if he actually will say something like that, I think get ready for about 108k in the coming few days. Rip to the live stream curse. Yeah, let's go over that in a second. No, but yeah, get ready for the 108k if these probabilities are going to be heavily shifting towards 20%, let's say. But in my base case scenario, where he will say, yeah, the tariffs are causing inflation, unemployment is rising, etc. So we're going to have a look into the data, and September you will know. Like if he's going to say something like that, I mean, he's not counting it out. He's not counting any rate cuts out. So that would be actually pretty bullish. And that would be a cause for a short-term dip, because short-term people will panic and think, oh yeah, it's not gonna happen yet. He's just gonna look at the data. But long-term, I think for the September meeting, it's gonna be incredibly bullish, because if he knows that he's not gonna do any rate cuts yet, he will say it probably. if he thinks he is gonna do rate cuts in September, I don't think he will say it. Like I don't think he's gonna say, "Oh yeah, get ready for a rate cut," but he will hint towards it. He will hint towards it and say maybe something like, "Oh yeah, we're just gonna have a look into the data. Might be, might be time to adjust something." He's always very vague about this. But if he's like hinting towards not no rate cuts, I think it would be already bullish. And I think the market, regardless, will be taking it bearish, and first will go down even more. So that is why I would be having a look again into a liquidity grab here. But eventually, keep in mind, okay, it doesn't really matter. It doesn't really matter in the long term. Because guess what? In a week time, everybody has forgotten everything. Everybody. And in a week time, probably a new narrative will get created, and we will just continue this uptrend. Because have a look into the global liquidity, have a look into the funding rates, have a look into the sentiment, have a look into the higher low structure, have a look into every single little detail. It's all confirming that in the longer term, we're just gonna go up even more. The 4-year cycle is almost over, but not yet completely. We're close to the finish line, but it's not finished yet. So I just think, even if we're going to be seeing a bit of a dump over here, well, it's going to be a great buying opportunity. That is one thing that I will say, and I see this uptrend is over. Well, do you think the bear market has started? Because that's what I'm talking about. Look, if you think the bear market has started here, well, then indeed, you think the uptrend is over, and then you don't want to be longing anymore. If you think something like this is going to happen next, think something like this is going to happen next. But I don't think the bear market has begun, because the 4-year cycle can still extend a bit further. And like I've been going over many times, this top right now is looking dangerously similar like the previous top. And because of that, I do not think the top is in yet, because every single cycle top has been looking different and different. So yeah, I think we've still got higher to go. And because of that, if we're just going to drop a bit lower over here, I just want to be buying that dip. We've got huge levels of support coming up over here. I think we will remain to hold market structure. I do not think that in this phase of the market, we will fake everybody out with market structure like this. Okay, I think we will end during a parabolic phase. So that would be, yeah, euphoria and FOMO in the market. Bear market just started. Well, these are the right comments I want to be seeing. But yeah, it could be started. It could be started. That's why I'm saying already take your profits now for Bitcoin. For Bitcoin, it isn't bad to start taking some profits off the table now, because 4-year cycle is almost finished already. Okay, I'm not counting it out that the top is in already. Okay, but I think most likely we will go higher still, and especially the altcoins. That is still what I think. Okay, and the thing is, you'll never time the exact top. You'll never time the exact top. That's why I already want to get a bit more cautious over here. And every single new high that we will create, I want to get more and more cautious. And eventually we will top out and, we will reverse into a bear market. But anyways, that's basically kind of what I'm thinking about the market right now. So in the short term, could be a bit more bearish. I think that's actually pretty consensus at this moment. Could be a bit more bearish, but in the long term, man, this over here is just going to be a dip for buying, in my personal opinion. I'm going to be buying it right now. That is just what I will be doing at this moment. I will not be getting worried. I will not be getting too fearful. I will not be getting shaken out, etc. I will be accumulating and buying even more. Yeah, I can't see the prices. Indeed, you cannot see the prices, but I mean the chat is also pretty cool to have in it. So I will make sure to actually call out the exact prices that I'm talking about. But yeah, let me know, guys, if you're excited about this event that you will get. I mean, we've also got other news like Polymarket. Odds are really dropping from off a cliff as well. It's not that bullish, you know. Also, at the same time, one Fed official has said he does not see a case for rate cuts in September. Let's see, man. Let's see. At the same time, I mean, the data isn't looking that promising. But also, I do want to remind you that although data isn't looking really promising, it's really that moment where you should want to look into buying. That's just one thing that I will say, okay? It's always during the times when everybody thinks it's over and the data is looking so bad, etc., that we find bottoms. That's just how the market works, pretty much. Will you do a live trade during the stream? Yeah, if I see a good opportunity coming up, I can do that. Your microphone cuts off a lot. The noise sensitivity seems to be too low. I'll try to change it right now. I think it is because during my videos I'm a bit louder, you know, I'm a bit more screaming. But now it's a lot calmer. A lot calmer. Hello? Right. You have a cheap microphone. I wouldn't say that. It's one of the best microphones in its class. I mean, it's not expensive. It's like 600 euros, the mic setup. But it's still one of the best microphones that money can buy. So that's good. Let me know if it's a little bit better right now. I've just increased the volume a bit. Despite these past weeks of dump fest, my alt bags are still green. Wow, that's good, man. That's good. Also, my trading positions, I'm still in the green. I'm still in the green of my week's account. Many people are saying, look at your trades now, etc. But I'm still in the green, man. If you want to hate. People really think the bull market has ended without euphoria. I mean, we could end without euphoria. It's a possible scenario because right now maybe just institutions have taken over, you know, and we're never really gonna see euphoria hype anymore like we have seen in the past. But I do not think it's likely. I just think I'm just a guy of look, history has taught me this. I think history will repeat until proven otherwise, until proven something different. Then I will adjust my thesis. But right now, I don't see any reason why I should think otherwise. Look, I'm open for the possibility. Do you think the rate cut is coming or not? Well, that's so difficult. That is really why the market is already going down right now. Because the market is already kind of pricing in no rate cuts. The thing is, look, I think a rate cut should be inevitable anyway, regardless of the probabilities, etc. I think interest rates are way too high right now. But you know, the probability is still 69%, right? Let's see, because I just cannot call for it. Yeah, I cannot really say it for sure, you know, and I can't really do a prediction on it yet. It's just no way of knowing. It's no way of knowing. We will just need to have a look into the event. Do I think it will happen? I just don't know, man. I mean, everybody that knows for sure, well, they're most likely lying, or they've got some really good insider connections with Jerome Powell. Where can I buy Arkham or Sand? You can buy it over on Weeks. Link is down below. And by the way, about Weeks, you can still today claim a free 1K Ethereum trade, which will be your last day. Today is your last day. Well, not today. Today is the last. Yeah, like it's going to be ending today. That's what I meant to say. It will end today. This 1K free Ethereum trade, and then also you've got a 30K deposit bonus and 25% trading fee discount. So that's absolutely lovely. And also on top of that, I've also got this campaign where if you deposit 10K, you're also getting a 10K free Ethereum trade. So make sure to check that out with the Weeks link over here down below. And you can also buy your favorite altcoins with the cheapest trading fees out there, because Weeks is having the cheapest fees out there. Do you think? What do you expect from the Powell speech? I've said that before, but I think most likely he will just say the same exact stuff like he says every single meeting, and he will probably just say, "Yeah, we're just gonna have a look into the data, and in September we will make a decision." Probably. Like he's also gonna say things like, "Yeah, tariffs are causing inflation," and then he's gonna say like, maybe something about the job market, that jobless claims are increasing. Weeks is a shady exchange. How come? Weeks is one of the most trustworthy exchanges that's no KYC. Like if you want the most trustworthy exchanges, go for example with Bybit. You know, it's the most regulated, or like Kraken. But if you want the no KYC exchange with huge incentives, with good bonuses and lowest fees on the market, which I think is the best option anyways for everybody, well then you can check out Weeks. All of the other no KYC exchanges are much more shady. How likely is it to enter the bear market without rate cuts? You mean now? You mean entering the bear market now without the rate cuts yet? I don't think it will happen, to be honest. I think what will happen is we will see that rate cut most likely in September. Not certain, you know, but that would be kind of most likely in my personal opinion. And then look, because we have rising inflation, cutting into rising inflation has always caused some kind of a recession. So because of that, because also the market cycles are aligning, I think a recession would be pretty likely in 2026. And then end of this year, that will already start to get priced in. 2026 recession starts, and then end of 2026, we repeat the cycle again where we bear market bottom. Same here. Weeks didn't give me 1K. Well, in that case, if you don't They need real accounts, man. If your account is looking suspicious, or if you've already got an account in the past, or you've used an email that is looking suspicious from like a temporary email or anything like that, like if there's any reason why your account might look suspicious, well then they will block you, because they're not gonna give any money to airdrop hunters. You know, I've got hundreds of people that were contacted me that were given their deposits. So it's not like they're scamming or something like that. It's really they're giving out all of the money to a lot of the people. It's just if you're looking like a deposit hunter, obviously they're not gonna give you money. It's not transparent. Well, it's one of the most transparent exchanges out there, guys, if I'm being honest. But obviously, an exchange isn't gonna give money to people that are trying to beat and game a system to give them free money. Like, that's not how it works. If you do the requirements, then okay, you'll get that money, because Weeks is incentivizing you to sign up, you know. But if you're gonna sign up with 5 different accounts and then try to get on that 5 different accounts, get that 1K free Ethereum trade, that's not gonna work, guys. It's not gonna work. That's what I told you also in this video, in this tutorial video. Well, they do have got the security team, man. And yeah, for sure, no KYC is always gonna because they're bypassing some regulations that will make them have no KYC. Well, Lewis, I don't know, but like somehow you look like a deposit hunter. Maybe it's your activity, maybe it's your pattern, how you trade on the exchange. Maybe it's because you did no KYC, because doing KYC increases your odds greatly. Maybe it's because of something else. I don't know. Just contact the support. They'll tell you exactly what and how and why. But if you look like a deposit hunter, you'll not get a reward. That's so simple, man. That's so simple. Yeah. Do you think Mr. Crypto? Do you think crypto will go down because of Powell's speech? Yeah, I think most likely. I mean, people are having a lot of nerves. They're very anxious about this meeting. Most likely, we will continue to go down a bit lower. But ultimately, I'm very bullish, and I'm still gonna go. And I'm still just gonna be buying over here. Still going to be expecting higher prices. Sticking to Maxi, EX is actually from Maxi. But then VX has a cheaper, more incentivized fees and bonus structures. And Maxi is getting KYC regulations and VX isn't. What's your Bitcoin prediction in terms of price action if we don't get the rate cut? Yeah, it could turn out a bit more bearish than expected. Maybe in that case, revisit these lows here. So at the 101K, maybe grab the lows there and still remain to hold structure. So still remain to hold this higher low trend here. And basically see a consolidation range here in the longer time frame, right? That could be a possible scenario, but it's going to be very bearish. Even if we're not going to see a rate cut, I think there will be another narrative that will get created, like possibly next week, that will still cause Bitcoin to go up even further. Right now, the narrative is just the meeting. We will go down because of the meeting. But I mean, price is always looking for another narrative. And whenever a new narrative for bullish price action gets initiated, we can go back up again. It's that simple. Yeah, man, from Maxi. Maxi invested heavily into VX, and the team is a lot from Maxi, and also from Huobi, and also from Bybit. What do you think about the CME gap fill? Which one? You're talking about this one here at 96k? I guess that's the only one I still have got on my mind, like recently. I've only got 96k CME gap on my mind. Other than that, everything's gotten filled, right? Are you bullish on Ondo? Yeah, 100%. 100%. I'm bullish on Ondo. Very bullish on Ondo. But in a short time frame, it's dipping a bit. Let's check up. What are the altcoins doing? And what is the Bitcoin dominance doing? Yeah, altcoins are bleeding a bit, huh? Ondo down 2.7, all right. It's okay. Pepe, I should buy some more Pepe here, man. It's discounted by so much. That's crazy. What's the Bitcoin dominance doing? Because Ethereum is holding strong. Ethereum is holding strong during this dip. That's crazy to see, man. Good to see. Here, look at ETH-B2C. On the 4 hour, you can add EMA ribbons, and this is looking beautiful in my opinion. Beautiful retest right over here, and boom, looking good. Anyways, let's load up the stream already. The stream is in 20 minutes time, so it's gonna get exciting. We're already seeing a bit of a drop, I'm having a look into the website right now. Which place is the best place to watch? I think, honestly, this is the best place to watch right now, to watch live. So we will be watching that live in 19 minutes from now. 19 minutes. That's gonna get amazing. It's gonna be amazing. A lot of volatility. Make sure to prepare yourself. Make sure to be prepared. What's your webcam name? It's not a webcam, it's a camera. It's a Sony A7 IV. With like it's a 16 to 35 millimeter lens, and that's basically it. Before I had like a huge light right in front of my desk, but I removed that. Right now I just rotated my desktop so it's facing me that way, and my window is right in front of me, so I've got natural light. Will we talk straight away? That I'm not sure. I do think so. Maybe not straight away, but when do you think we have the top for altcoins? I think around November. Around November, open the live. It's still 17 minutes. Who the hell just bought an Ethereum bag? What is it doing? Wow, crazy. That's crazy, yeah. I mean, stocks pretty much just opened, man. Stocks opened mega bullish. So the stocks are opening mega bullish. That's crazy. Wow. All right. Let's see. What are the rate probabilities doing? It's getting back up again. Man, I think this actually is one of the most interesting parts of the year, basically. Like, have we ever, like, this is such a pivotal moment, I think, for markets. Like, not of the year, but definitely, I think, for this summer, you know? It's such a pivotal moment, and it's crazy how much volatility I think we're gonna get. Pump it, Powell. Yeah, let's see. Do you think it's manipulation? Yeah, 100% always manipulation. I mean, it could just be the last pump, guys, before this sweep, and then get back up higher. All right. We're getting back up. I mean, Wall Street is buying. It's obvious. I mean, I've been saying it, that I've been saying a long time. That I've been sticking my word to it. That Ethereum 100% is going to be outperforming Bitcoin here. And that Ethereum is looking great. I mean, that's also the reason why I've been scaling down my Bitcoin position massively. And I've been scaling up my Ethereum position, right? Yeah, moments before flash crash. We could see it. It's possible. Let's see. But typically, whenever you see like risk assets like Ethereum now rising before such an event, like risk assets wouldn't be rising that much if the market really was going to be anticipating such a bearish statement. Like, it could of course be manipulation, right, and a fake out. It could be the last fake out, but risky assets rising before such an event, that's generally extremely bullish. That's good to see, you know. That's one thing I would say. Bitcoin is pumping, yeah. Ethereum is too. Good to see. I think we have bottomed. It's crazy how quickly the sentiment really shifts. I mean, just a few moments ago, it was really like, oh yeah, are we gonna head lower? How much lower can we go? And right now, I think we have bottomed. Let's go. That's crazy how quick that sentiment is shifting. Still 13 minutes left, but I think we're gonna see fuckery to both sides, in my opinion. But, I mean, it's still too early to tell you, right? You cannot really give a direction yet at this moment. My printer is ready soon. Yeah, make sure to already get your printer ready, guys. What do you think about the liquidity below? You mean, yeah, I'm right now just having a look into this chart for that previous low, and I'm talking about this liquidity below. Yeah, it seems, if I'm having a look into this chart, seems very likely to grab it. But who knows, man? Who knows? Because this is what I've been saying so many times. I just want to be bullish, guys, here. I just think we're still in an uptrend. I still think we're going to be headed higher, especially for the altcoin. So, who knows, right? Who knows? That's why also it's going to be so important to have a look into the meeting. And after the meeting, we will have much more of a direction. Could be possible, purple guy. It could sweep liquidity below the 4K level. Could 100% be possible. But it's just a strong level of support. It is a strong level of support. So, and I think Ethereum is gonna hold up stronger than Bitcoin anyway, because money is clearly rotating from Bitcoin into Ethereum during this part of the cycle. And it was to be expected, right? It was to be expected. We expected it so many times. Still 10 minutes left. I think the market makers are shaking everybody out in the days leading up to an event. Yeah, it could be possible. Would make sense. Great thumbnail. Yeah, man. Was cooking up some thumbnails again. I mean, for the thumbnail, I'm just there. Here, this thumbnail, right? I'm just there in the thumbnail here. I'm talking to Jerome. Hey, psst, psst. Please, just be dovish. Cut rates. I was the one, guys. I was the one telling Jerome here in his ear, please cut the rates now. Hopefully he listened, but this was an actual photo, actual camera photo that we took during the Jackson Hole event. Yeah. So we had a little bit of a shoot there. They should come back to Dubai. Yeah, man. Here. Oh. There we go. Like this, it really doesn't look good, if I'm being honest. If I just turn the cam. I really feel that this current pump is liquidating the shorts. Yeah, I mean, that's what I've been saying, right? We're for sure gonna see a lot of fuckery, and we're gonna see a lot of volatility in both directions. We're like, of course, market makers are gonna take full advantage of this and are just gonna grab a lot of that liquidity, you know? Obviously. GBR, no, I'm in Marina, yeah. But I'm at the other side, right? Of the canal. Are you friends with Powell? Yeah, man. I took this picture with him. Today. I just told him, you know, cut the rates, man. Cut the rates. I hope he listened. Yeah. Inflation is going up, yeah. I mean, if we're gonna see inflation continue to go up, and we're gonna see a rate cut during that time, that's not gonna look good. Because rate cuts into inflation, into rising inflation, has always caused a recession. Thanks for telling him. Yeah, I'm just doing some good work, guys. Just doing some good work. 6 minutes left, 6.5. Did you show him your? Yeah, man. He's gonna start trading over on weeks right now. He told me, yeah, maybe I should start to trade over on weeks because indeed it is the best exchange out there. Will he be live here, man? You see that door over there? He's just gonna walk in and he's gonna say, "Hi guys, I'm gonna cut rates." Yeah, 100%. I think Powell will be Powell and stay firmly positioned on doing nothing. That's exactly the thing. He is the master of saying a lot of nothing, you know? And then saying so much, but in the end, he's just gonna say, look, we're just gonna have a look during September's meeting. That's probably what will happen, most likely. Let's have a look into the probabilities now. Did they change slightly? Did the probabilities... Oh, it's going back up again. That's very good to see. We are just below 70% right now. It's getting back up again. I mean, but yeah, still we're coming down because we went from 95% to 75% now. Sell. I mean, I can see your chat, man. What do you think about the inverse head and shoulders on ETH? Oh yeah, I saw it this morning. It looks very good. Yep, indeed. Here, inversed head and shoulders. That's looking very good. If we can break above this neckline, man, I think Ethereum is up for some massive gains. But leading into this event, leading into this meeting, I do not want to trade now yet. You know, I don't want to trade now yet. I would like to see us coming down to this level still, and that would be a good possibility for me at least. But let's see if we will even see that, because still, regardless, Bitcoin is looking great. I mean, especially the altcoins are looking great. And we will just go up regardless, you know. But the meeting will be important for the short term. It can really give and push us into a direction. Yeah, he's gonna stay neutral 100%. Yeah, market might. I mean, most of the time we do this, right? Most of the time, the market is just panicking during the meeting, and because it's I don't know, it's so anxious, it's so uncertain, and then afterwards we bounce and go up again. It's actually funny. Yeah, my positions are right over here. If you want more detail on all of my positions, I'm opening in real time. Well, then make sure to join the Platinum group with the first link down below, because over here I'm sharing everything I'm thinking in absolute real time. This morning, video about Jackson Hole event, also any trading updates I'm posting in absolute real time. Whenever I'm doing anything with my trades, I'm sharing it in real time. So make sure to check that one out with the link below. And also start printing in the market. Anyways, 3 minutes left. 3 minutes left. You are Dutch, yeah, man. I mean, yeah, everybody thinks we're gonna come down. Let's actually create a poll. Start a poll. What will happen during the FOMC, or not FOMC, during Jerome Powell speech? A dump or bump? Yeah, let's see. During the speech. Because I wanted to ask like and after, but that's like that will get too advanced for this poll. But yeah, I think right now anyway, a majority will select dump anyway. So let's see, man. If I've still got some bulls in here, if I've still got some people that are very optimistic. Because yeah, if the optimistic scenario plays out, it will get very big. I think I'm getting a better link to watch the live show. It's 1 minute left. Yeah, we're going a bit down in the short term. It's okay. Let me have a look into this. Yeah, I'm just gonna keep this one for now. Or not. I think this one might be better. So it's time now. It's time. What are people saying? Pump? Ethereum pump? Wow, what? That's crazy. What? What is going on? Why is that live stream not live yet? Is this live stream live? No, also not. I'm just gonna keep them both open now. But what? That is crazy. What is going on? All right. All right, bro. What is this? Congratulations, guys. I guess. Aren't we supposed to dump? Yeah. No, I'm. Wow. This is crazy. All right, we're breaking also above that resistance. Yeah, look at S&P, probably S&P. Look at this candle. That is crazy. Oh, but probably, yeah, S&P is shooting up. But the event isn't live yet. What is happening? What are the rate probabilities doing? We are breaking above that resistance just here, right? This resistance here, we are breaking above it. Probabilities are doing nothing. It's just some huge fuckery going around. That is crazy. What? I expected volatility, but I didn't expect this. This. You know, I didn't expect this. I mean, I'm happy. I'm happy. I'm okay with it. But, okay. All right. He's live. He's live. All right. Let's go.
And the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for
the
workers.
News is just coming in, guys.
This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%.
Yo, this is
Of course, we cannot take
crazy.
the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing
Sorry,
inflation
guys,
problem.
to interrupt, but
So, putting the pieces together, what are the implications for monetary policy? In the near term, risks
that's
to inflation
important.
are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era.
Everybody's watching the price now, right?
It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic.
Yeah, I will explain a bit later.
The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations, to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the long run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment.
What is it?
During the review, we
15
discussed how
minutes?
the 2020 statement's focus on the ELB may have complicated communications about our response
That's
to high inflation.
crazy.
We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that
Let's
insight.
watch a bit further.
First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate
My
about the
phone just
inflation
keeps
that
blowing
arrived
up with
a few months after we
notifications. We
announced our
go up
2020
more and
changes to the
more
consensus
for every
statement,
coin.
as I
Like
acknowledged
every
publicly
exchange
in
is picking out a new
2021.
coin. This coin is up.
Well-anchored
Just keep
inflation
blowing up.
expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
All right. Yeah, this was definitely an interesting one. It was definitely an interesting one. I mean, we have had a lot, and we're cooling off a bit. I mean, it's to be expected, right? It's to be expected, first of all, to cool off a bit after such a thing. You know, that's to be expected. It will not, like, we will see pullbacks on the way, and we will see like some structure getting created, okay? I do not think we will reverse the entire pump and then go back up again. I do think that at the very least we will remain to hold some kind of a higher low structure and we will continue the pump now, because like what has just happened is kind of insane in my opinion. Let's have a look into the rate probabilities now. But I do think they've shifted a lot. Yeah, 91% at this moment. That's crazy. 91% at this moment. And let's quickly recap. Well, rate probabilities are shooting through the roof right now because Jerome Powell has basically almost at the beginning of the meeting said this, and he has held a dovish stance throughout the entire meeting, basically. So Powell says that the shifting balance of risks may warrant a policy adjustment. Okay, so basically rate cuts. You know, basically he has said that rate cuts are probably gonna happen. Like, he cannot say for sure rate cuts are gonna happen, but basically he has said almost certain, probably it's gonna happen in September. So yeah, we shot up. He has also said downside risk to employment is rising. Base case is inflation effects on tariffs will be short-lived. There's another dovish stance on the market, on the rates, because this will probably cause Jerome Powell to cut rates. So it's bullish again, and that has been pretty much the entire meeting. He's said a lot of nonsense again, for us at least, But yeah, markets are pumping like heavily right now because of this. Because what will happen next? is rate cuts. Rate cuts will happen very likely right now in September. And I think because of that, we will just continue this pump that we're having now. Okay, we will continue it until September. Most people think that September is going to be a bad month. But because of this right now, I think it's going to be way more likely that September will actually be bullish. And then everyone being very extremely bullish because of rate cuts, right? Rate cuts. Oh, we're going to go to the moon. More liquidity. Everybody thinking this. We're going to go to the moon now. Okay. But they don't realize markets are always forward looking. And right now, the smart money is already positioning themselves like we have been positioning ourselves on these rate cuts. And later, when the normies are going to come in and say, oh yeah, more liquidity coming in because of a rate cut that's happening this week, right? At that moment, then we're going to see a dump, right? And in the long term, rate cuts are going to be bullish for the markets and it will cause markets to go up even more. But I think end of September, Bitcoin might be topping out because of that. Because, like for the cycle, because we're hitting the peak. We're hitting the 4-year cycle peak. People are going to be forward looking. They're going to be anticipating maybe a recession later. The narrative will still be created. I don't know the narrative yet, but that's what I think most likely will happen. So from now, most likely up until September, pretty likely. That's what I think most likely will happen. And then during September, Bitcoin will top probably. And then November, so 1 month after the top for Bitcoin, I think 1 month after that we will see also so maybe October we will also see altcoins topping and then it's over. Yeah man, I will be treating him with some dinner and shisha today. So we're doing good, man. We're doing good. Glad to have witnessed this live. It was kind of insane. I mean, I didn't expect it to be this insane, if I'm being honest. I think nobody in the market expected this. Literally, that's why we pumped so much, because nobody was expecting this. This crazy, And because nobody was anticipating it, we pumped like this huge, right? If everybody would have expected it, we would have never seen a pump like this. That was sick. Yeah, it was insane. And by the way, the reason why Bitcoin is going up slightly and Ethereum and altcoins are really exploding is because rate cuts will be extremely bullish for risk-on assets, like for example Ethereum. Right? Obviously, Bitcoin is already kind of a risk-on asset in it of itself, but Ethereum is much more of a risk-on asset, right? It is a much bigger risk asset. So, that's why we can see, for example, Bitcoin up slightly and Ethereum, etc., and all of these altcoins going up a lot more. All of these altcoins going up a lot and a lot more on those 6.7, insane. At the same time, stock market kind of consolidating as well. We could see, in my opinion, a little bit of relief, maybe slightly, but really the stance will be bullish here. I think we will just be headed even higher and higher right now. I do not think. I do not think the market is going to be canceling this entire pump because this was not priced in. It was not priced in, right? The probabilities were pricing in more to no rate cuts. So this pump that we are seeing was not priced in. Actually, this entire dump was pricing in no rate cuts and was pricing in anxious feelings. Right now, we are getting back to the baseline. Plus, we're going to be headed higher because it's going to be more and more likely that we will see the rate cuts. So that's basically it for the stock market. And I think all of the assets will continue to follow, like Ethereum, like Bitcoin, like altcoins. Bitcoin dominance dropping off a cliff. Isn't it looking amazing? it's looking so amazing. It's looking even more amazing because everybody has told me that I was stupid right over here. And I've proven the haters wrong. That's why it's looking so amazing, because nobody believed in it. Nobody believed in me and altcoin season. And right now, dropping off a cliff. Rate cuts, I mean, it is going to be very bullish for these altcoins. It's going to be bullish for risk on assets. That is what we're seeing now. And we're dropping off a cliff for the Bitcoin dominance. I mean, yeah, money rotation is starting. Guys, I think get ready. I mean, we're going to be headed for a weekend, no? Okay, be careful with that slightly. Now, I don't think it's going to be that bad if Ethereum continues to pump during this weekend. But if we're going to create a CME gap for Bitcoin, probably this CME gap, I do think we are going to fill it. So let's see how high we can come on this Friday. But for the weekend, let's go over it in the daily analysis video of tomorrow, what I think will happen next for the weekend. I also need to rest my mind a bit to really think forward what's gonna happen next, really with Bitcoin now, but generally I'm very bullish. That's one thing I will say for sure. But like what's gonna happen within the next few weeks, obviously up, but during this weekend I need to rest my mind a bit, to think about that. But generally still very bullish. Ethereum is also just breaking even higher. It's looking very good. Guys, one thing I will say though is congratulations if you did yourself take advantage of this free 1k Ethereum trade, which you could still claim with that link down below. I mean, if you took advantage of this free Ethereum trade before the stream, then you would have been in absolute great profits right now. That's insane. Congratulations if you did do that. Also, make sure to join the Platinum group, because I'm gonna upload a video right now, because like I always say, whenever something huge is happening in the market, I'm always keeping my Platinum group up to date, like in absolute real time. So I'm gonna record a video right now about it. It's crypto alpha though, it's not a trade update. We have just had the Fed meeting, not the Fed meeting. We had just had the Jerome Powell. We have just had the Jerome Powell meeting, and crypto is absolutely exploding. It is because Jerome Powell has said some insane, amazing things. First of all, like you can see over my Twitter, Powell has said that shifting balance of risks may warrant a policy adjustment. So basically, rate cuts will very likely happen. The probabilities are right now highly shifting towards a 91.5% chance of seeing a rate cut. And it is amazing because all of our trades are pretty much exploding. I'm still long and strong. What do I expect is going to happen next? Well, I think the markets will continue to rally to the upside. I mean, it was not priced in that we're going to see for sure these rate cuts. Basically, we have seen almost this entire dump to the downside because of fear and uncertainty in the market. And right now, we are just slightly recovering this dump to the downside. But I think we're going to recover this move easily back to the upside. This entire move back to the upside. I think this will be happening next. However, it's going to take some time. We're not going to go there instantly. We're still going to be seeing some corrections on the way up, probably. Pretty likely. We have a weekend coming up, so keep that one in mind. Anyways, for Ethereum, I think Ethereum is gonna look a lot more bullish than Bitcoin, because Ethereum obviously is a risk on asset, and this news that we got basically confirmed bullishness for risk on assets like Ethereum, like altcoins. More money will be flowing into altcoins in risk on assets. And you can be seeing that in a Bitcoin dominance as well. The Bitcoin dominance is really starting to crash right over here. I will think that it will continue to fall, continue to trend to the downside. And this is just the beginning of a massive trend shift, right? This is just the beginning of this massive reversal to the downside right over here. So that is what I'm going to be watching. Ethereum is going to be outperforming. We can see that, in fact. I mean, ETH BTC is right now up 6.2%. It's insane. Ethereum is going up like crazy right now. I think this will continue to happen and will continue to go up right now because this has basically just confirmed the altcoin season. So make sure to stay up to date right now. I'm live streaming. Make sure to tune in at this moment. Stay up to date over on my X profile. And guys, make sure to stay printing. All right, just gonna upload a video right now. Like I'm always saying, I'm always keeping my group up to date. And by the way, for everybody watching, it is free to join. Free to join. So make sure to do it. Yeah, it's uploading right now. Imagine going 10x long before the meeting. Yeah, indeed. If you went 10x long before the meeting, exactly before the meeting, that would have been crazy. But I mean, I'm still printing, you know, I'm still printing. There we go. Just uploaded it and like altcoin season is confirmed, something like that. All right, there we go. Great video. Just posted. And Ethereum is going higher. Wow. That's crazy. Yeah, the video that I just recorded pretty much all sums it up, right? It all sums it up pretty much. I want to join for the group. Well, you can go to the first link below, and over here you can join a platinum group. It's free to join. You do need to deposit $100, but for most of you guys, you're trading anyway, and Weeks is the best trading exchange to be trading at, so why not do it over on Weeks, right? Yeah, we will rally more to the upside. I mean, we're just poised for a big run to the upside now. Look at Bitcoin. Yeah, I mean, I like it. I like it. Could it break all-time high? Yeah, 100% Ethereum is gonna break all-time highs now. But like in this hourly candle, no, probably not. Probably we are gonna see at least one correction. And by the way, the correction can be pretty big and pretty severe, guys. It can be severe. But yeah, ultimately the trend will just be to the upside because we have seen a major shift in the market. Just like I've said in that update video on my Telegram, right? Basically, the whole entire move over here to the downside has been getting initiated because people have been getting fearful and anxious about a Fed rate cut. They've been shifting their probabilities. The market has been pricing in no rate cuts happening. And that is why we have been going down by so much. Now, right now, because we have pretty much confirmed a rate cut right now, we're pretty much gonna catch up this entire move plus more. Because right now it's confirmed. It's not even, you know, that's the thing. Because right over here, the rate cuts weren't even confirmed, right? It was not confirmed over here yet. Still, we reached this high point. Right now, it is confirmed. Pretty much almost confirmed, you know? Like, if Jerome Powell says something like this, it's basically confirmed, right? So it's almost confirmed. So that would mean we would theoretically go higher than that previous point over there, right? That would mean that. That makes sense. So it would make sense for Ethereum, yeah, to break all-time highs now. But on the way up, for sure, we're going to see some corrections, 100%. Total 3 head and shoulders pattern on the daily charts. You mean head and shoulders or inversed? Oh yeah, inversed. I think you mean this one. Wow, that's insane. Yeah. Wow. Insane. And at a level of resistance, while Bitcoin was moving to the downside. I mean, Bitcoin has sneezed. Total 3 has seen a lot of relative strength to Bitcoin. And yeah. Yep. Thank you for the heads up on the head and shoulders. This is looking great. What are the funding rates doing now? It takes some time, right, for these to readjust, but let's see if we can already see something. Yeah, I think it takes some time still, but Solana, for example, still negative. Most of the altcoins still negative. Cardano is still negative. A lot of shorts were opened, and these shorts are just being squeezed out as well right now. So yeah, classical pattern being repeated again. Having a look at this on the daily. Doesn't this look amazing, beautiful? Wow. On the daily, just look at it on the daily. I mean, you tell me. Doesn't it look like a lot like, for example, this stage right over here? Right? I mean, all of the fundamental facts are there. All of the charts are there. I've been screaming about it for so many times. Yeah, now we're just profiting. We are just profiting. We are profiting. I went from red to green. Congratulations, man. Yeah, on the daily, nice flag. Yeah. Wow, what one meeting can do with like the entire sentiment, with all of the prices. This man, look at the power that he has. That's crazy. Yeah, he created a huge daily candle in about 5 minutes. Yeah. Why are you shorting a bull run? I'm not shorting, brother. Oh, this guy. I have a short. Yeah, I'm not shorting a bull market. I'm not shorting a bull market. This is what I've been telling you so many times. So many freaking times. I'm never ever shorting a bull market. Finally, no dumping during the stream. Yeah, man. Finally, no dumping. That's amazing. Yeah. Uh, 2024 return. Yeah, I get what you mean. I talked about this in today's update video, no? Because, 2024? You mean this one here? I mean, could we see that? Technically, we could, right? Technically, yeah. Technically, we could. I'm not counting it out. That's what I will say. I'm not counting it out, but I will just remain to stay calm and chill in my positions. I think the markets wanted this for a long time, rate cuts, and right now they've basically been getting confirmed. So, and in 2024, yeah, I do remember it was very dovish as well. Yeah, it will be an interesting one to have a look into for sure. I mean, I think we have enough time during the weekend to think about it. Is it the right moment to go short on Bitcoin? Well, I am never shorting in a bull market. That's one thing I never do. That's one thing I never do in a bull market. I'm always just going with the trend. I'm sticking with the trend, and that has allowed me to make a lot of money. Live till Trump speaks. Well, when does Trump speak? I'm not sure. When does Trump speak? Remind me on that. But yeah, I'm not sure how long I'm gonna stay live because it's already starting to get a bit darker here in Dubai, and I don't have any gear or setup to any light setup, you know, any lighting for if it gets dark. Yeah, probably it's going up by a lot, right? Probably market rate cuts. So in like 1 hour time. Yeah, no, I'm not gonna stay live until that. Why doesn't the I get it. Yeah, the website is blocked in the UAE now, right? I can't load up Poly Market. It's blocked here. You don't have a light switch, man. For these cameras, it works a little bit different, man. Bro. Ah, shit, man. Have you got at this website? Right now, 1.4 mil. Over on weeks. Why did you show that big arrow down? Yeah, because this morning, I was thinking, look, because the probabilities were going down leading into the event, it made a lot of sense, right? For markets to go down even further. But I wasn't drawing, like, if you watch the video, I wasn't talking about this scenario here at all. At all. The most bearish scenario I was talking about was going to be this scenario here. This was the most bearish scenario I was talking about. But we didn't grab the liquidity below. Okay, we bounced because of very important data that we got. And that's why I said so many times in today's video and the live stream of today in the beginning, it doesn't even really matter what technical analysis I'm having a look into. What's ultimately the most important thing will be what Jerome Powell will say. And first off, when he said this, we already all knew that we were gonna go up, you know, that it was gonna get insane. You know, this wasn't expected, but I was saying, just have a look into what Jerome Powell will say. Do not trade this, okay? Trade it if we go down into this support box, then yeah, you can trade it. But do not anticipate a move down. Just have a look into what Jerome Powell will say. And right now, by the way, we are testing this resistance, but that is what I've been saying the entire time, right? I didn't say for sure we're gonna come down. I was saying the entire time, Jerome Powell, what he will say is going to be very important. Love your TA, bro. Great videos. I watch everyone. Well, that's good, man. That's good. Thank you so much for watching every video, and I'm very glad you like it. I'm just sharing my analysis every day, holding myself accountable, and it's lovely that people can get use of it. Also, I would say though that it's good that you watch every one of them, because some people only just come in good times whenever everything is going up, and then they watch. But I will say though, you should watch every day, because then you can anticipate on moves that are about to come. You need to watch every day, and you need to really put a lot of effort into it. You cannot like come for one day, think, oh yeah, he says this today, so I'm just gonna trade this, and then expect that tomorrow you're rich. That's not how it works. You really need to put a lot of time and effort in it. And I will say, if you watch every day for at least a year, you're gonna do very well. What do you think about Zora? I'm very bullish on Zora. I'm still holding. So yeah, make it go up. And especially now with altcoin season, etc., and Ethereum narrative, I think it will continue to just go up even more. Yeah, what is Bitcoin doing? Ethereum is almost up 10% in a day. That's crazy, guys. It's literally crazy. It's madness. Do you think projects like Echelon Prime, I don't know the other one. But yeah, I will say that most of the strong altcoins will continue to do well, and most of the coins that have been showing weakness and have been doing very bad, most of them won't recover. That's the one thing I would say. Anyways, guys, I will call it a day right here for this stream. Make sure to join the Platinum group with the first link down below and start trading over on weeks. This is still your final chance today, because today this campaign is going to be ending, to claim a free 1k Ethereum trade, which this link is also including a 30k deposit bonus, 25% trading fee discount. You are getting the cheapest trading fees out there on the market with that link. And also, if you deposit 10k, you're going to get an additional 10k free Ethereum trade. Make sure to check out that link down below and start trading with free money and claim your deposit. It's the cheapest fees out there on the market. Make sure to start trading over on weeks. No KYC, no deposit required. Join the Platinum group, because over there I'm going to be sharing every single little update I'm having about the market in absolute real time. Like you can see over here, Crypto Alpha just posted a video if I'm going to do anything with my trades and when I will do that, because I'm gonna do something with it later, but then I'm gonna post it in the My Trade section. So make sure to join the Platinum group. Start trading over on weeks. Also, by the way, There's this huge trading competition ongoing right now, $1 million S2. I think there's $2 million in rewards and daily free spins for anybody that's trading over on weeks. So make sure to check that one out too. Anyways, yeah, it's been a great day. It's been a great freaking day. And I think we will continue to go up. Anyways, if you've been watching this stream, you already know what I think is going to happen next. I might record another video right now, just dependent on the lighting setup, because I need to create a whole setup again for it, for my lighting, etc. Not sure if I will do that. I'm gonna check up on it, but yeah, make sure to stay tuned for that, maybe potentially on my YouTube channel. Anyways, it was great to have you guys in here. Make sure to be subscribed to my YouTube channel to stay up to date about all of the alpha. And guys, I'll see you in definitely another update video